Get an SBA loan in 30 days or less. Even when you think you can't, it's absolutely possible. As a matter of fact, it's easier to get an SBA loan than you ever thought was possible, but you have to know the steps to do it. And in this training, I'm gonna map out how you can actually qualify for an SBA loan in 30 days or less, even if you don't even think this is a possibility for your business. We got a lot to cover. You're gonna leave this training with the step-by-step formula to get approved, and I'm gonna end this training by giving you access to my guide that has 27 killer ways to get financing to grow your business. We got a lot to cover, so let's dive in. All right, so why would you want an SBA loan to begin with? Well, SBA loans are popular because they have long terms and low rates. And that combination of long terms and low rates helps you get a lot of money with a very low payment. As a matter of fact, the first time we ever got financing through a cash flow type lender, we got $75,000 and our payment was over $9,000 a month. But then when we got our SBA loan, we got $350,000 and our payment was only $4,600. So we got like $250,000 more in money with half the payment. That's why you want SBA. You can get a lot of money. The term is 15, 20, even as long as 30 years. You get low rates, which lets you borrow a lot of money and keep your payments very low. But all that being said, how do you actually get approved in 30 days or less? Well, let's dive into the steps right now. All right, let's get started with the first step of the first thing that SBA lenders are going to look at, which is the cash flow of your business. Now, there's several things that SBA lenders are going to ask you for that you're going to need to verify this cash flow. They're going to ask you for a P&L. They're going to typically ask you for an update P&L, possibly one for last year and one for the quarter. They're going to ask you for a current balance sheet. They're going to ask you for 3 to 6 months worth of bank statements. And they're looking to make sure that you manage that bank account responsibly. You're not overdrawing the account. More money is going in the bank account than actually coming out. And they're also going to ask you for tax returns, typically 2 to 3 years. This is why you typically have to be in business for 2 years or more to get a lot of different kind of SBA loans. Now, don't worry if you don't meet that criteria. There's also SBA microloans or even SBA loans that are designed for startups that you're still able to secure. But now what are they looking for in all of these documents? Well, 2 things really. First of all, are you making more money than you're spending? Do you have positive cash flow? And are you managing your bank accounts and your financials responsibly? Now, the other part of that is they want to make sure that your revenue is stable or preferably even increasing. They don't want to lend to a business that's in trouble. They don't want to lend to a business that's losing revenue, that's losing momentum. They really want to lend to a business that's stable or growing, so it becomes very important to be able to get an SBA loan. So make sure you have those documents ready. It's a good idea to put a folder on your desktop and just have those documents in there regularly, so when you know it's time to apply, you know that they're sitting there waiting for you to actually get approved. The second step or second thing SBA lenders are going to look at is credit, and they're going to look at 2 sides of this coin per se, personal credit and business credit. SBA says on their website that you should remove any blemishes on your credit report before you apply. Kind of gives you an idea of how stringent they are on their credit requirements. Now, it's not really score based. Yes, you should have good credit scores to actually get approved, but what SBA is really looking for is that you don't have any major derogatory items. Even one late payment on a Bank of America account, for example, can really hurt you even if it was years ago. Now, you have some old medical collections from back in the day, typically not going to be a problem. But when you're going late on credit cards and other kind of loans, and the recency of those things will adversely affect your ability to get approved. So if you have credit issues now, work on fixing those issues, because by doing so, you can drastically improve your credit by adding more positive accounts on there, removing negative accounts that can't be verified or shouldn't be there based on the Fair Credit Reporting Act that disputing can remove, and this will give you a credit profile that makes you SBA worthy. Now, the other side of this is business credit. You really need to have established business credit to even get an SBA loan. Look, SBA lenders use a FICO Small Business Score, FICO SBSS, and this score weighs business credit history heavier than consumer credit history. So what it means is that in order to have a good FICO SBS score, you have to make sure you have good established business credit. And if you do, that good established business credit can even offset damages on your personal credit. So make sure you're building business credit with Dun & Bradstreet, Equifax, and Experian. By doing so, you'll have a high FICO Small Business Score, and that's going to go a long way to helping you get approved. And that brings me to criteria number 3 to qualify for SBA loans, or step number 3. You need to have assets equivalent to whatever it is that you're borrowing. SBA's underwriting guidelines actually require the lender to take anything and everything they can as collateral that's equal to the loan amount. So they're going to start with with business assets? Do you have account receivables? Do you have purchase orders? Do you have inventory or equipment? Do you have vehicles? Do you have real estate? And if that's not enough to cover the amount you're borrowing, then they're going to look at your personal assets instead. They're going to look at things like collateralizing your home, or maybe vehicles you own, or even things like stocks and bonds. So whatever you have on the personal asset wise, that might be required to actually qualify if you don't have enough business assets to cover the amount of the loan that you're actually borrowing. So again, this is why a lot of business owners don't even try to get SBA loans until they're more established in business, because the problem is that you're not able to usually have collateral until you're a couple years or more into the development of your business. So make sure you have that collateral, and that'll meet the step 3 of what SBA lenders are really looking for. All right, so now you know how to get approved for an SBA loan. Let's talk about the 4 most common loans you're going to deal with. The first is called an SBA 7A, and this is basically the kind of loan you're going to get for any kind of working capital needs. Payroll, marketing expenses, just the day-to-day operations of the business growth, all of that falls in the 7A category. More than likely, most of the financing you get through SBA will be 7A. The second is called 504, and this is actually for the purchase of fixed expenses or refinance of fixed expenses. It could be utilities, but most commonly, it's real estate. So if you're getting an SBA loan to buy some kind of real estate, you're usually using an SBA 504 loan to be able to do it. That brings me to option number 3. A lot of people don't know about these. They're called SBA micro loans. They're really good for new businesses. They're really good for startups. You're able to get approved for as much as $50,000, although the average amount of these type of loans are about $13,000. Now, there's a reason you don't hear about them, because usually lenders are offering SBA guaranteed loans, but they don't offer micro loans because they just don't make enough money on them. So you're actually going to have to find an intermediary in your area to get one of these loans. You can go to SBA's website and even just type into Google, hey, I want an SBA intermediary for a micro loan in my state, and it will pull up options for you. You go to one of those intermediaries, and the guidelines for qualification change exponentially between the type of intermediary you're using and the state that you're in. These are typically nonprofit organizations that will actually help you get those micro loans. So if you're newer in business, don't write off SBA. These micro loans may be the answer you're looking for. And that brings me to the 4th most common type of SBA loan, and that is basically disaster assistance loans. Now, we saw these come out, for example, through SBA with PPP loans. We see these come out through hurricanes, through fires. So these are loans that help you in a situation where you've been adversely affected. Maybe your business was physically destroyed. Maybe your revenue declined because you weren't able to work for a week because of a hurricane. Whatever it may be, when there's a natural disaster that impacts your business, this is where these type of loans come in. They're easier to qualify for. They're typically faster to be able to get, and by actually getting one of these loans, you can get really low rate long-term financing that helps you recover from whatever that natural disaster was. So there you go. Those are the 4 most common types of SBA loans you're going to deal with. All right, so now let's get you prepared for your actual SBA loan. Well, one of the things you're going to need to prepare, we've already talked about. It's all those business financials we already walked through. Make sure you have those at the ready. The next thing is you should be expected to be able to complete the information for them to do a full background check. Look, they're going to ask you things like, have you ever been convicted of a misdemeanor or a felony? And you really need to think back, because even things from 30 years ago that might have been some crazy thing you did as a kid can come back and haunt you. I can tell you from personal experience. So make sure you're prepared to be able to actually do that background check and fill out that information. They're going to need to do so. They're also going to ask you things like previous loan history with SBA. They're going to know the kind of outstanding loans that you have now and anything you've ever borrowed from SBA as well. They're going to ask you things like an overview of your business, a license that you have for your business as well, a lease on the property that you're actually in if you are in a physical property that you're actually running your business out of, and they're also going to ask for a business plan in many cases, so you should have a plan created. There's a lot of places like LivePlan that you're able to go to get a business plan done for very, very cheap. So there you have it. If you have those things, those are the things that SBA is going to ask for in the application process. If you have those at the ready, as well as the income documents, that's what's going to make things go quickly. Look, I can't say this enough. I spent decades in financing, and I can tell you when somebody asks me how long something is going to take, here's my answer 100% of the time. That depends on you. You are the one that will slow down this process. The lenders aren't usually very slow. It's when they come to you and ask you for something, and then there's this delay of you getting it to them, that's what slows down the process. The more prepared you are, the more of these things you have at the ready, the easier it's going to be and the faster it's going to be to get approved. You can send a full file in with everything SBA needs. That limits the amount of requests they come back to you with, and if you're able to get those things back to them very quickly, then you'll get approved very quickly, and that's the key to funding in 30 days or less. So now that you have it ready, how do you actually get approved? Well, you just want to go through an actual SBA approved lender. Remember, SBA doesn't lend money. They guarantee money. So what happens is they actually go to a bank like Bank of America, and a Bank of America lends you that money that SBA guarantees that if you default, they will pay back 70, 80, 90% of whatever the defaulted amount is. So SBA doesn't issue loans. It's issued through an SBA lender. So I always recommend that you start with your own lender. Like if your bank that you deal with regularly, you have a good relationship with your banker, well, start there. That's a great way to go. If not, you really want to look for what's called a super broker. A super broker, like Credit Suite's an example, does a lot of different funding. So as a result of that, we get more exceptions. We get more things done than normal brokers or by applying by yourself because we send so much funding to our lenders that our lenders have more clout to be able to make exceptions. So look for a super broker if you're not going through your bank because they have more power to be able to overcome obstacles to be able to help you get approved. Whatever path you choose, make sure you're choosing a super broker, make sure you're choosing a direct lender like the bank that you actually deal with now to actually submit your application and to go through the actual SBA approval process. And there you have it. There's everything you need to know to get an SBA loan in less than 30 days. I mean, now we've talked about what's going to take to qualify, how you actually get approved, the things that they're going to ask for along the way. Remember these tips. Be prepared. By having all these things ready before you even apply, the application process can go smoothly and it can go quickly. Be prepared that they're going to come back and have questions. They're going to ask you for additional documentation. This needs to be your priority. You need to put this as top priority and get those things back to the lender as quickly as you possibly can. That's the key to being able to get approved. And also remember, SBA will lend you as much as $5 million. So even if you don't get that all in one shot, even if you're just getting $300,000 to $500,000, which is really easy and fast to get, don't forget you can always go back and get even more funding in future rounds with SBA. Hey, if you want even more ways to be able to get money for your business, grab our free guide at creditsuite.com/27. That's creditsuite.com/27. There you'll get our guide on 27 killer ways to get funding for your business. And by the way, if you got value from this training, smash the like button and make sure you subscribe and keep your eye out for our next training. We talk about more cool ways to get the money you need to grow your business.